So these dollars that are generated by this business, it's not $1. This dollar goes to the supplier buys his own supplies, that dollar goes to the next person, that dollar goes to the next person, and the next person. Every time that dollar changed hands, somebody paid taxes. Maybe sales tax, probably income tax if there was a profit there. So there's an enormous economic benefit from a company that pays no taxes. That's why it's allowed, because it's really, really good for the world. You should not trust anybody who makes this comparison. If you see this on Twitter, and you're seeing it this morning all over the place, people are going to say this. A typical middle-class taxpayer might pay several $1,000s, whatever, per year. Trump only paid $750 in 2017. So therefore, it's totally unfair, right? No. Anybody who gives you that comparison and tries to convince you that you've learned something because you compared Trump's total taxes to an average citizen, they are lying to you. Or they don't know a frickin' thing about taxes. Those are the only two possibilities. Anybody who makes that comparison is a flat-out liar, or they don't understand the field whatsoever. There's no way that comparison makes sense. It's comparing a peanut to an elephant. They just are different things, and I'll explain why. All right? Let me explain for anybody who doesn't follow finance, doesn't do their own taxes, a little simple situation. I'm not claiming that this equals Trump's taxes. It's a generic situation, right? So suppose you've got a company in 1 year, any year, that makes $2 billion in money coming in. So that's what they've earned from people paying them for their services or products. And they've got an expense of $1 billion a year that is actual checks and money that they've given out. That would leave them, since they brought in $2 billion and only put out $1 billion in expenses, that's $1 billion left over to spend on stuff. But if they also bought a lot of assets, let's say they bought buildings or computers or vehicles, you can do a thing called depreciation. Depreciation is, instead of taking the cost of that thing and acting like you spent all your money the year that you bought it. So let's say you bought a building and it was $1 million. You don't write off the whole million as an expense the year that you bought it. The tax law says that you write off a little bit every year based on what the tax law says. If it's a building, maybe it's 15 years, for example, and you just spread it out as if it's an expense. So if you had $1 billion of these paper artificial expenses and $1 billion of real ones, the two of them would equal $2 billion, and that's all the money that you had coming in. So even though you made $500 million in cash, that's yours to keep. You made $500 million, it's yours to keep. You got $500 million in cash. On paper, you made nothing. And you don't have to pay taxes, federal income taxes, if you made nothing. Now, is that a bad situation? Is that unfair? Is that the rich people taking advantage of a tax loophole? Nope. Nope. This law about how to deal with depreciation, and indeed depreciation won't be the whole story with Trump's taxes. There will be other loopholes and things built into the law that he took advantage of. But everything that's in the tax law is there because both Democrats and Republicans, in all likelihood, thought it was a good idea. That all the smart people thought it was a good idea. Now, there are people who argue you should change the tax to a flat tax, etc. So there is always room for debate. But the point is, this idea of how to treat taxes, even for rich people, is not really controversial, in the mainstream of people who understand finance. Find me a CPA, somebody who is an expert on taxes, who thinks that this is bad for society. You won't find any. There's nobody who understands this field who thinks that this is bad or should be changed. Now, when I say nobody, you can always find somebody who will say anything. But the mainstream Democrat, mainstream Republican, they're all in favor of this. There's nobody on the other side of this. Now, the other thing you need to know is that when they say he didn't pay taxes, they're usually talking about federal income taxes. It doesn't mean that no taxes were paid. Indeed, he paid a bunch of salaries, and everybody who earned a salary paid taxes. So instead of the taxes coming out of here, it went to the people. The people had an income. They paid taxes, and that goes to the federal government. They also probably paid payroll taxes and Social Security and and other related things. That all goes to some government, either local or federal. What about property taxes? Every big company, especially if you're a real estate company, have enormous property taxes. What about suppliers? He's buying stuff from suppliers. They make a profit. They use that. Once they get that profit, they pay taxes. All right? None of this happens, none of this, unless this happens. So why is it that the government and the IRS thinks it's a good idea to have a situation where sometimes big companies pay nothing? It's a good idea because you really, really want this other stuff. You want jobs, because if somebody has this job, the government doesn't have to support them. That's a big win. You want all these taxes. This is exactly what you want. Now, if this lasted forever, would that be good? What if a big company just never paid taxes? They just always found loopholes and just never paid taxes. Would that be good? Well, it actually would be pretty good for the reasons I just told you. Tons of taxes get paid, but it's a second order effect. Now remember, these suppliers who made money because they sold stuff to the company, once they make their money, they go spend it again. That's called the multiplier effect in economics. So these dollars that are generated by this business, it's not $1. This dollar goes to the supplier buys his own supplies, that dollar goes to the next person, that dollar goes to the next person, and the next person. Every time that dollar changed hands, somebody paid taxes. Maybe sales tax, probably income tax if there was a profit there. So there's an enormous economic benefit from a company that pays no taxes. That's why it's allowed, because it's really, really good for the world. It's not a coincidence that Amazon has this situation. It's not a coincidence that there are lots of companies that have this situation. Here's what you need to know for your further lesson in economics with my awkward whiteboard. Here's a situation which might be somewhat typical for a company that's not paying federal income taxes. If you're a growing business, meaning that you're plowing money into your business continually, it could be that your expenses are going up, because let's say you're buying a new building, you're investing in some infrastructure. You're just putting all kinds of money into that. Now this could be real money, expenses, or depreciation, but it could be going up like crazy. At the same time though, it's fine. Your bank will give you loans because your revenue is going up like crazy too. And the hope is that someday you'll get to the point where you don't have to put in as much every year and you can just start harvesting the benefits. A good example of this is your cable company. The company that is digging ditches and putting cable in the ground and connecting one neighborhood after another. Every time they connect a neighborhood, they make money from that neighborhood. So that neighborhood that the cable company connected is now profitable. But the company itself is not profitable, only that neighborhood, because they have already put in 2 new neighborhoods that are not yet profitable. As those new ones become profitable, now you've got 3 profitable ones. Yay! If you stopped there, You could immediately get your expenses going down while your income goes up. Hey, you're making money and you're paying taxes. But why would you? You didn't start a company. You didn't start a company to get to some point and then just level off. You started a company to grow forever. And the best way to grow forever is to keep getting bank loans, to keep getting financing, private financing, etc. As long as your revenue is going up, and it looks like it could cross over in the future, the banks will give you all the money you want. People will buy all the stock that you want. You can give financing easily and cheaply. Now, I don't know if President Trump's situation is like the one I described. But what's important is, neither do you. We don't know. Now, maybe if I looked at the details of his tax returns, I could deduce this. I'm not sure I could. But if the news has not described to you if this is a normal situation of a growing company, is he plowing his money back into assets that are creating jobs and creating other kinds of taxes? That's the best situation you could possibly have. Now, it turns out that as an attack on the president, it's really, really effective. Because how many people understand this little lesson that I just gave you? If you were to guess what percentage of the general public understands that you can't compare an average wage earner's taxes to a big company, and that there are good reasons you can't compare them, what percentage of the company do you think, or of the country, do you think knows that? I would say 20% tops. Yeah, somebody's guessing 20%, somebody says 5%, 10%. It's somewhere in that range. It's definitely not more than 20%, but it's probably in the 5 to 20% range. Now, having explained it to you, we're good now, right? Everybody who sees an explanation like this, they didn't used to know, but now they've seen the explanation. Oh, good. I guess that problem is solved. We used to be ignorant, but now we've been informed, so I guess we're all good. No, it doesn't work like that. It's not just that 20% of the country are the only ones who understand this. It is that 20% of the country might be the only ones capable of understanding it, which is a horrible thing to think. But it's true. Something like, I would guess this is true, something like maybe 20% of the public has the raw intellect and the enough context and background and enough of a talent stack to even understand what I just said. It's kind of complicated. I would guess that there are a whole bunch of people who watched this, saw this maybe for the first time, some of you, and are saying to yourself, I think I kind of follow that, but I'm a little hazy on the depreciation part. I kind of need to see that explained a few more times, which would be perfectly normal. Trust me, if you go to school for economics or accounting or something like that, the first time you're introduced to the idea of cash flow being different from income and depreciation being this invisible expense, the first time you see this stuff, it doesn't really stick. You kind of need to be introduced to it over and over again before it sticks.